Kendrick has made headlines by predicting an XRP price of $12.50 for the year 2028. The question is whether this is a realistic target, an overly conservative estimate, or perhaps even a pessimistic one. To answer this, we need to look not only at XRP's current performance, but also at the major catalysts on the horizon that could shape its value over the next few years. At the moment, the crypto market is showing signs of modest recovery. XRP is trading at 3.09 with a gain of 0.6%, while Bitcoin holds around 17,500 and Ethereum stays near 4,400. BNB is trading above 835. Further down the list, Cardano continues to struggle, hovering near the $1 mark, while Stellar XLM trades at 0.42 with a minor decline, and Hedera HBER shows more strength at 25 cents with a gain of 2.5%. These numbers show that while there is some renewed volume entering the market, it is still relatively minimal compared to what would be needed to confirm a sustained bullish trend. But the bigger story lies in what is coming next. The United States Securities and Exchange Commission is set to decide on several XRP ETF applications in the week between October 18th and October 25th. Major names are lined up for review, including Grayscale on the 18th, 21 Shares on the 19th, Bitwise on the 20th, and others such as Canary, WisdomTree, Franklin Templeton, and CoinShares all clustered on the 24th and 25th. This concentrated approval window could be a defining moment for XRP. If even one of these applications is approved, it would represent the opening of the floodgates for institutional capital, something that has not yet been fully realized for XRP. ETFs have historically been powerful drivers of capital inflows for other assets. We saw it with Bitcoin ETFs, where the arrival of institutional products unlocked billions in demand. XRP could experience a similar surge, especially given that its legal clarity in the United States has set it apart from other tokens still under regulatory uncertainty. If approval comes in late October, XRP would for the first time in its history be positioned as a regulated, institutionally accessible digital asset. That factor alone suggests that a projection of $12.50 in 2028 may understate the potential upside. Adding weight to the bullish narrative, Coinbase Institutional has signaled that Altseason is approaching. In a recent update, they made it clear that the broader altcoin market is gearing up for a rally. Altcoin Daily, a channel with more than 1 million followers on X, also reinforced this perspective, suggesting that XRP and similar projects could be on the verge of significant appreciation. For long-term holders, the sentiment is shifting from caution to optimism, with expectations that the long-awaited Altseason will bring substantial gains across the board. On the technological side, Ripple and Stellar are moving closer to full interoperability under ISO 20022 standards. This integration will allow both blockchains to work seamlessly within the global financial system. The logic behind this is clear. XRP is tailored for institutional clients and large-scale banking operations, while Stellar's XLM focuses more on non-banking users and retail accessibility. By enabling both networks to interoperate, financial institutions and individual users alike could benefit from an ecosystem that covers the full spectrum of needs. This structural alignment strengthens the case for XRP's role in global finance and makes it increasingly difficult to imagine it remaining undervalued for long. Looking at Kendrick's prediction of $12.50 for 2028, it is important to evaluate the growth trajectory already achieved. From November of last year to January of this year, XRP delivered a six-fold return. Even in its current state, the token has demonstrated the ability to multiply quickly when momentum and liquidity align, expecting only a four-fold increase over the next 3 years, especially in a context of greater adoption, stronger institutional support, and ETF approval, seems conservative to the point of pessimism. Banks themselves have an incentive for XRP's price to rise, because a higher valuation allows larger settlement volumes with fewer tokens in circulation. In other words, efficiency improves as the value per unit increases, making low price projections inconsistent with the asset's intended use case. When we step back, The broader picture is of a market preparing for transformation. ETFs, interoperability with Stellar, institutional recognition, and macroeconomic tailwinds all point to XRP playing a larger role. Even if volatility persists in the short term, the trajectory suggests acceleration, not stagnation. It is therefore reasonable to view Kendrick's forecast as cautious, and perhaps even too restrained for what lies ahead. Ultimately, the future of XRP will be determined not just by speculation, but by adoption. Regulatory clarity in the United States, institutional entry through ETFs, and integration with global standards like ISO 20022 all combine to create a foundation unlike anything the asset has had before. While $12.50 might sound like a respectable target for 2028, it may in reality underestimate both the scale of adoption and the financial system's demand for efficient settlement solutions. XRP's journey has always been tied to utility, and as that utility grows, so too does the potential for its value to exceed even the more optimistic forecasts.